In this episode, we speak with Jim Quagliaroli, co-founder and managing partner of Silversmith Capital Partners, a Boston-based growth equity firm focused on partnering with and supporting the best entrepreneurs in growing technology and healthcare companies. Founded in 2015, the firm has $3.3 billion under management across 4 funds. Jim has served as managing partner of the firm since inception. He partners with passionate founders of growing SaaS companies focused on product leadership. Over his career, he has served on the board of over 25 tech companies and over 15 boards as the first institutional investor. Jim has been recognized by GrowthCap as a top software investor in each of the last 4 years. Silversmith currently sits at the top of GrowthCap's Leaderboard for best growth investment firms. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Jim, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Glad to be here, RJ, and thank you for the opportunity.
You know, it's been amazing to watch Silversmith grow over the years. And I feel like we at GrowthCap had a bit of a watchful eye since we saw when you started in 2015. So much has happened since then. It's impressive how you've sequentially raised funds every 2 to 3 years and at increasing sizes. That's not an easy thing to do. Given the nature of how investing works, it's difficult to time perfectly deploying capital from each fund. How do you think your firm and your team has been able to accomplish such a feat?
Well, first, some background, right? We founded Silversmith back in 2015 as a growth equity firm, and we wanted to be focused on partnering with exceptional founders leading established growth companies. And so that mission to support founders and CEOs is at our core, and we've tried to stay consistent to that mission. And when we looked at that in the early days, we said, let's focus on specific areas of domain of technology and healthcare, and let's focus on specific stages of companies. And so that meant that we weren't going to be all things to all founders because we were trying to orient on just segments that we had a perspective on and just stage of companies where we thought we could help. But I think we look at that lens because, as you noted, the fund sizes have gotten incrementally bigger over time, but the mission hasn't. And really, the modest increases in fund size over time has been tied to our desire to support the companies over time. And so we look at it as we're more people today, we have more capital, but the mission and the purpose is the same.
From what I've observed and talking to folks in the industry, sometimes it can be difficult to find those investment opportunities and to be able to effectively deploy kind of in time with the companies that, you truly want to back without feeling forced to put the capital out. Do you have some kind of special way of operating? Is it that folks know you in the industry? How do you best kind of uncover and start to partner with companies?
So we do not have a special way. I wish there was a special way. I wish there was a formula. I think we approach it with a view that you said what you've said a couple of times in terms of deployment. Partly it's an understanding, and I think understanding in real comfort that deployment is not going to be linear in our model. It probably shouldn't be. We never have a business plan at the beginning of the year that says we are going to invest X million of capital in Y companies. And I think there's different organizations that are wildly successful that can be more prescriptive along those lines. But we look at it through a lens of our constituency here as men and women who have founded and are leading companies that fundamentally don't need capital. And so we're getting to know these people over not weeks or months, but quarters and years. And we actually prefer that because we get to know them, but they get to know us. And so we really view this as a shoe leather industry. It's a bit cliche, but we do think that there's no substitute for hard work and getting on the road. And I think because of the dynamic of these types of companies where they're already growing, they already have revenue. We invest in companies that already have customers, so you can analyze that customer behavior, what they like about the product, how they behave with the product. And founders that have already achieved a level of success, I individually, and I think us as a team, like that dynamic because it forces a conversation where you have to earn the voice and earn the time. So I don't think there's any secret formula. We try to get in front of great companies. Some of those great companies may be wanting to do something in 2025. Some of them may want to do something in 2030. I think the differentiation that we as a partnership try to instill across the firm is to say it really is about a long-term orientation. It is a long-term perspective, and that patience isn't rewarded, quite frankly, on a weekly, monthly, or quarterly basis. And that can be very hard, particularly for people that require or want that type of feedback. But that's okay, because I think our view is we have an absolute bar, not a relative bar. And by that, I mean, we're looking for certain types of founders with certain types of characteristics in those companies. If we find those, it may result in situations where we're doing multiple deals in a given quarter. There may be years like 2023 where I thought it was a great year because I was super proud of our effort. I was super proud of the grit we showed. We had a lot of great meetings with great founders leading super dynamic companies. And we didn't do one new platform investment the whole year. And I think that was the right decision, but that's part of the patience that you have to bring.
Mm-hmm. Honing further into your specific focus, Silversmith's specific area of focus, you've invested as a first-time institutional investor in companies many times over, maybe like 15 times or so. What do you think it is that you bring to bear to that company where they know they're not just getting capital, they're getting someone who's kind of seen this before and can truly help them scale?
I think how you frame that question in terms of what you're bringing besides capital is the key point. And it's actually something you have to think very deeply about if you're going to start a firm, because capital, our view, capital is not a competitive differentiation, right? Nor is strategy, in my view, right? People's strategy to try to invest in great growth companies and help them grow. It's a strategy, but the execution is very hard. So, when we're asked this question, RJ, by our founders in terms of how we've been instrumental to CEOs, helping them scale, in some respects, I think the answers from our founders is much better than any tactical answer that I or my partners or my colleagues give. Now, the tactical answer is I think we're always helping with recruiting. So if we're investing in founder-led companies that have key man, key woman risk, we're trying to build and recruit and bring A's around that core team. If we're investing in companies that have strong products that have already shown some level of success and they're looking to accelerate that success, we're thinking deeply about how to augment go-to-market initiatives, right? And go-to-market initiatives, it's not just sales or marketing, but thinking through the nuance of, is it a direct sale, is it an indirect sale? Are you thinking about geographic expansion? Are you thinking about a partner network? Things of that sort. And so that bleeds into pricing and packaging, where I think we have a lot of experience. In more than half the occasions, founders are asking us to source and support them with M&A. But really, it's the nature of the portfolio companies that we're investing in. They're pretty small companies, maybe not from a product or franchise perspective, but pretty small from organizational perspective. And so I think we're really trying to help first and foremost by being good listeners, right? To support our type of founders who are really domain experts. Our view is you have to invest the time. You have to invest the time to understand their product, their use cases, their customers, their market, their competitors. Because if you're talking to someone, the early days of AppFire, the early days of PDFtron or DistroKid, all situations where we were the first institutional investor, those are all founders that have built businesses and require you to show up with some level of domain expertise. And so I think being good listeners and doing the work is a big part of it. Second part of it is we really want to bring to bear our network, right? Sometimes being a good partner is about, having the humility of what you don't know. So there's lots of situations where I've worked with founders and I've said, that's a good idea, and this person's going to have a much better answer to this than I will. And so knowing how to get out of the way and leverage your network sometimes can be critically important. And then lastly, I think what they're getting with Silversmith is hopefully a partner that understands, even when things go well, that the journey's long, it's hard. And I think founders want a partner that has an opinion, right? So in my view, and we say this to founders as they get to know us over years, being a good partner doesn't mean just being a cheerleader, right? We want to be supportive. We want to roll up our sleeves, but sometimes we look at it as our role of helping founders determine and assess where to lean in and where to lean out. And if we're disagreeing in a constructive way and saying, hey, I understand your perspective on this, but this is not what the data is telling us. And so jumped around a little bit, but I think in terms of that referenceability has a lot to do with the type of partner we want to be. The tactical elements of quote value add are super important, but I think we think deeply about the manner in which we're partnering and supporting companies over a long period of time.
And when you reflect back on your time to date with Silversmith, is there a company that you think best exemplifies everything that kind of Silversmith can bring to bear and have impact, strong positive impact on a company?
So maybe I'll pick one and then I'll follow that with telling you who my favorite child is. So just so we can pair those two things. You look at companies, a company like LifeStance, where my partner, Jeff Crisan, quite literally wrote the business plan with Mike Lester as our senior advisor of buy and build in mental health, or where my partner Sri Rao invested in AppFire as a remote first company before COVID, doing some really interesting things around the Atlassian ecosystem, but the company had less than 100 people. When we invested in PDFtron, now called Apprise, it was a husband-wife team, Catherine and Yvonne, amazing founders. It was a 48-person company. I think there was 46 engineers, but lots of examples of companies where the strength of our thesis was just visionary founders that we wanted to support and wanted to win with. But, one that sticks out for me, I think, is DistroKid. And DistroKid, in terms of how that company evolved from a business and music platform that had such, not just affection, but love by its customers, and help manage all of their workflow and payments around distributing music to the major digital service. That was something that really was product strength that led to word of mouth, that led to a really compelling P&L. And it was not just a domain expert founder, but in Philip Kaplan, someone that was quite literally an amazing software programmer as the founder, to be able to architect IP and systems that could scale, combined with the fact that he's actually an amazing drummer as well. So my co-founder, Todd McLean, led that investment. And why that sticks out for me is because at the time we invested in the business, it had 8 people, right? So is it a company? Well, it's an amazing product and it's an amazing brand. But when we think about all those elements of building around Philip, building not just people, but building systems, and really having the aspiration to say, gosh, we're meeting Philip right now in New York, but this is a legitimate global opportunity to be a market defining company. I think you get to that point, the conviction that Todd had there to meet the company and say, this is a Silversmith deal. This is what we're leaning into back in 2018. I think it had to do with how compelling Philip was as an individual. It had to do that they had already gotten to scales about 14 of revenue when we invested in the business. But there were certainly a lot of deals in Todd's history that allowed him to bring to bear some pattern recognition to say, okay, strength of product plus word of mouth plus global opportunity, dating ourselves a little bit, but Todd was the first institutional investor in SurveyMonkey. And I know that there's certainly some parallels there. So that's one I'll pick, but there's certainly a long list.
Could you tell us about maybe a time that was particularly challenging where maybe you were an investor in a company and it wasn't going as planned, but you were able to figure out how to resolve a situation and turn it into a good outcome nonetheless?
Too many to count. It's a humbling business for sure, right? And people, whether it's on websites or fundraising decks or anything else, you just put the ones that are up and to the right. But I think we are big believers and say this to the founders when we are making a case for Silversmith. Sometimes that case for Silversmith is when they're talking to a lot of other really great competitors that we have. Sometimes it's talking to these founders when they're deciding to do nothing. And we're trying to make an argument of why we'd be a good partner. But philosophically, we're big believers in how we conduct ourselves when things aren't just up and to the right. So, one that jumps out for me, certainly we invested in a business called Red Awning in 2017, which is a really elegant SaaS platform selling into property managers to help distribute and monetize their vacation rental inventory. And so if you're a property manager and you want to market and manage that payment flow and all the workflow associated with getting that inventory onto a VRBO or to an Expedia or HomeAway, Red Awning is a single source platform to let you manage and navigate all of those different APIs and data collection, data input avenues, and be able to do that in a seamless way. When we invested in 2017, the thesis was that vacation rental was the fastest growing segment and one of the highest strategic priority across all of the OTAs, online travel agencies. And it was a bootstrapped business led by Tim Choate and Lance Nelson, who had a lot of experience and then complemented each other really well, both in terms of Tim's acumen on the sales and marketing side and Lance really being a world-class engineer, and paired that with a view that it was an up and to the right story. And so we had gotten to know the business in 2016, invest in the business in 2017, and up and to the right for multiple years. And we always try to be prudent with our base case, but we didn't have in our base case or downside or upside case that we're going to have a global pandemic in 2020. And so, 2020 and 2021 and 2022 for a business that is in real estate tied directly to travel, tied directly to vacation and vacation property when people are trying to stay in their homes and be safe, there's not a lot of playbooks for that. And so that's something where, again, similar to my answer around sourcing, and we view it as it's tied to hard work, it's tied to grit, it's tied to just spending the time. That was a very tough situation. But I think partly our view there was saying, hey, this is not going to be solved next quarter. It's not going to be solved next year. And so, again, having that long-term perspective, having some empathy for the team, a lot of empathy, because this is much different than just missing bookings for a quarter or losing some key hires. It was kind of a fundamental shift, and having a view and being able to say explicitly, we're in your corner, we're in the boat, no matter what happens, and we're going to make this work. So it's something that we're still into today. But I think really appreciated how that team rallied around and, continues to be a vibrant, growing company today.
We're heading into the tail end of the conversation. I like to end with two final questions, but before I do so, I'd like to touch on something. In my last podcast interview happened to be with a friend, old friend from high school, your high school, Roxbury Latin. I happen to know one or two other guys that are also amazing people and have done well in their careers. What do you think it is about your high school that helped prepare you to do well in life?
So, Roxbury Latin is a very special place for me because I think formed a big part of how I think, and its emphasis on the person and character and the boy's development is first and foremost. And I think when you go there, you really feel that in the truest sense. And I think, particularly when a school of that academic rigor, I think reputationally, it has that reputation. It's excellent academics, great athletics, the boys who attend the school and who make it through the 4-6 years. They go on to good colleges. And I think all of that external is what the outside world sees, but the internal fabric is solely focused on the boy. It's solely focused on his development, his character, and really instills this view of serving others. And so that really resonated, and super grateful that I was able to go.
Excellent. Okay, last two questions. Can you tell us about a person who has had a profound influence on you?
I think certainly there's lots of teachers at Roxbury Latin, lots of professors at Harvard that took an interest in at a time where I'm not too sure I would have spent the same time. But, if it's a person, I mean, I think definitely my parents. I mean, I think the level of, I think tied to those two institutions, actually, I mean, the level of sacrifice that they made to be able to put me into a position to be able to go to Roxbury Latin. And then Harvard, my perspective at both those places was I was ecstatic to be there, right? Super grateful. And my view wasn't that, hey, this is a burden or this is really hard. I looked at it as sometimes pressure is a luxury, because pressure means that people are expecting things from you. So that sacrifice that my parents made. But I think also growing up, I would say that my brother and I would feel very supported. And I think they were focused on our academics, but that was secondary to us really being part of the community. So, my dad was someone that coached both of us in sports for 3 seasons, and my mother was very involved in the town. I think she's still a member of the Needham Community Council. So I think instilling that giving back, and quite frankly, that responsibility of giving back, that's something that, I really give them credit for.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
There's a handful. I think the ones that my wife and I are most loyal to, we do some of that anonymously, but I think my wife, coming out of grad school, she was a social worker. She went to school social work. My days, I think, when we were young were, when I was trying to figure out spreadsheets and convince founders to meet with me, were a little different than hers. And so, I think there's some institutions that she's known for a long, long period of time where are good reminders in terms of kind of grounding us in terms of what some people, who have different needs are going through. So there's a few there that we, care about and try to support.
Excellent. Well, Jim, want to thank you again for taking the time to chat with us today. It's been a wonderful conversation.
RJ, thank you for the time. Have a great rest of the week.
Thank you.